Problems at the indebted Chinese real estate giant Evergrande are spilling out onto global markets. Stock exchanges across Asia, Europe and the United States have seen losses on Monday. Property groups have so far borne the brunt of the sell-off, but there's concern of a possible spillover into other areas like banks and insurance. Last month, Evergrande warned it may default on its debts unless it can raise new capital. Well, shares in the company fell by almost a fifth on the Hong Kong market on Monday, before finally closing down 10% overall. Evergrande has around $300 billion worth of liabilities, and that's more than any other property developer in the world. Those problems saw the Hang Seng Property Index close almost 7% down on Monday. The wider Hang Seng was down over 3% overall, with Germany's DAX and France's CAC 40 also seeing losses. Evergrande is due to pay over $80 million in interest on a 5-year bond this Thursday. I asked Henry Chin, who is CBRE's Asia-Pacific Head of Research, about what might lie ahead.
I think the process of deleveraging started a few years ago. It's nothing new for us in Asia, to be honest. Deleveraging is not only happening for developers as well as happening for banks as well. We do believe the Chinese government, what they are trying to do is acting on the long-term interest of providing sustainable growth as well as social economy stability. And I really have to highlight here is the Chinese real estate market is getting more and more mature. As a result, I think going forward, the Chinese real estate market is not only for residential, it's more of a balanced growth stories.
And what's the effect of all this on investor confidence in China?
I think clearly we have to say the short-term volatility is inevitable. We do believe the government is committed to protect the rights of foreign investors. But given the current policies environment, we have to say it is expected to see larger transactions probably is going through some greater deals of scrutiny. So investors probably need to bear that in mind as well. But based on how we daily interaction with the clients, both the foreign investors as well as the domestic investors, I think clearly those investors are continuing to focus on China real estate market, particularly Beijing, Shanghai, and Shenzhen. Similar to what you are seeing in Europe, industrial and logistic and front and center from everyone's mind when it comes to China.
Well, Evergrande, though, is clearly a company with deepening problems. But do you think it's a company that is just too big to fail?
I think looking at the current policy measures, I think the central government has been focusing on the theme of a common prosperity to make sure there is a social stability. So with that in mind, it is certainly not desirable or likely for scenarios of a widespread ripple effect on the larger real estate sectors or the wider economy. I think in the short term, we do believe opportunistic players will step in for distressed assets if the prices are low enough. But I have to say the process can be quite lengthy. For developers who are actually facing some great pressures on their debt obligations, some restructuring and some reorganization are likely to happen based on what we have seen in the past.